Welcome back. Let's turn our attention to what could possibly the biggest scam we've ever seen in this country. Now, these are not the best of times, if you like, for Nigerian businessman and CEO of Tingo Group, Mmobuosi Banye, popularly called Dozi Mmobuosi, who has been accused of fraud by the United States Securities and Exchange Commission, SEC. Now, the U.S. SEC also has filed charges now against his three companies for inflating financial records of the companies now and key subsidiaries to defraud investors. Tingo Mobile Limited, a fintech company now, came under scrutiny after a report by US-based short seller Heidenberg in June, alleging that it was a fraud, and of course that sent its stock price crashing. According to the commission, Mmobuosi has since 2019 inflated the financial statements of the company. The SEC also alleges that since at least 2019, Mmobuosi falsified financial statements and other documents of the three companies and their Nigerian units, Tingo Mobile and Tingo Foods. In its report, the commission said, as against the $461.9 million reported for its 2022 fiscal year, the company's bank accounts allegedly showed a combined balance of just around $50. Now, the complaint further alleges Mmobuosi made material misrepresentations about his business operations and financial success and siphoned off funds for his benefits. Mmobuosi gained attention in the UK in February this year after submitting a bid to buy football club Sheffield United, which ultimately failed. The SEC has since imposed a 2-week suspension of trading in Tingo Group's securities. That's on November the 14th, following investigations. Meanwhile, NASDAQ has also advised it will continue to keep the company's securities halted pending a review. Joining me now to discuss this further is financial analyst Kalu Aja, who joins us from the United States of America. Mr. Aja, thank you very much for joining us on the program. Let me start with what this means for the image of Nigeria. How bad is this?
Well, it's bad. Short form is bad. But let me deflect a little bit. This is a U.S. I think the real issue here is that the Tingo was incorporated in Nigeria, but the shares were issued in the U.S. So I think the question is, how could this have passed through the U.S. regulators? How did this guy, how was he able to perpetuate this fraud for so long? NASDAQ listed, tried to list on the A board in the New York Stock Exchange. How was this possible for so long? Yeah, that's just my take. It's bad because they're going to say it's a Nigerian that ran this. You know, the bank that I'm seeing on the SEC listing here are Nigerian banks, but still, you know, I have to ask that question in a way. It's very bad in terms of the image. It falls into that same, you know, stereotype that we're all fraudsters in quotes, more or less, and that's just going to be bad for us going forward.
And I'm just wondering, for Nigerian companies now or firms that may be seeking to also list in the markets over there in the United States, how difficult is it going to be for them going forward? Because obviously, because of what has happened with Tingo Group, they're going to come under intense scrutiny.
This happens across the world. You know, there are lots of companies and lots of individuals that go to this in the US and are found out to be fraudulent. I think the chairman of Tesla, not the Tesla, the guy that does electric trucks, was just jailed 4 years. US company, US citizen, falsifies records of the sales of electric trucks. He was just jailed. This happens everywhere. The reason why you go to the US to list is, of course, the compliance, you know, and the risk and the governance that you have in the US market, that investors believe that a higher level of oversight has happened on your books. Clearly, this didn't happen in Tingo's case. He fell through the cracks. He lied his way through, as alleged, and now it's falling apart. So I think if you go in, it's going to be the same level of scrutiny. But the SEC also relies on the auditors and the board to do that secondary, or should we say the primary check on the account before you come to the big board. And I think that's where the failure started, that at the very, very basic level, the banks, the auditors, the board of directors did not do their own due diligence and ask those deep questions before it then got to the general listing platform of the SEC and the NASDAQ.
And you know, talking about the auditors now, how could some of these revelations have escaped some of these auditors, especially like Deloitte, for instance, that has been mentioned in this case? I mean, auditing Tingo Group's records and all of that. How could all of these have escaped their attention?
This is my point, and this is actually where I want the story to go to. I think there are going to be fraudsters every day. You're going to have a new fraudster tomorrow. But why we have auditors, why we have independent directors, why we have a board, is so there's a secondary check on your books. I'm an investor. I can't rely on what Tingo gives me, so I rely on what the auditors say Tingo has given me. The auditors say these books represent a true and fair representation. I rely on the auditors to then invest. And it's also quoted in the US market. So where have I gone wrong as an investor to rely on a US company, audited books? You know, it's difficult. But how could this pass through that the guy had no cash? This is cash. I'm not talking about assets that are difficult, maybe the valuation of the asset. The guy had no cash. And he said he had millions of dollars of cash. And you let that fall through. It's a simple, you write this up to the bank and say, verify this. It's basic. How was this not done? You know, so was this forged? The SEC says some were forged. But how was it possible that the auditors could not write a letter to the bank and say, please confirm this exists? So it's funny. I think we're in the early days of this investigation. I really like to know what the auditors were doing.
What about the regulatory authorities here in Nigeria? I mean, look, let's face it. Let's even talk about Tingo Mobile, for instance. It's not a name that rings a bell here. And I have not come across, Tingo Mobile. It's not even, a mobile company that I think operates here. I don't know, but, these things were actually in the open. So how could the regulatory authorities here to have missed out on this? Not just Tingo Mobile. You talk about Tingo Foods. It's not a household name here at all. And then when you look at the figures that they claimed these companies have actually grossed, you begin to wonder. These are not popular names in the country. You talk about the agri-tech fintech. That's the Tingo fintech now. At some point, this individual, Dozi Mmobuosi now was claiming that they have about 9-point-something million farmers signed up to the app in this country. I'm a journalist. I cover the agriculture sector as well. It's not something that I think I have seen. So how could all of these also have escaped the regulatory authorities here, like our SEC, for instance?
Yeah, let me tell you my personal story. The first time I heard about Tingo was on Bloomberg. Bloomberg, not a Nigerian publication. Bloomberg wrote an article that Tingo had been valued in upwards of $1 billion. This is Bloomberg. We all go to Bloomberg to get news. And I did see it on a Nigerian platform, but on Bloomberg. So I did my research. I did put it on Twitter. And they said, oh, you haven't heard about it because they only deal with farmers. That their mobile phones are used by farmers to get fertilizer, like the fertilizer for subsidized fertilizer. So it's like, it's not a rural phone, but it's used by farmers. That's why you haven't heard about it. Okay, but it's on Bloomberg. This is the point I'm bringing across now. If you see a story on Bloomberg, and you see that they are quoted on the NASDAQ, they have a board. Even if you are the director here, you sort of like, maybe I'm the one getting it wrong. So maybe I'm not, maybe they are really a real company, but I'm the one not doing my homework well to see, I don't see anything in front of me. The same thing what happened with Bernie Madoff. He was committing fraud. It was clear and apparent it was fraud, but many doubted. Listen, this guy was a NASDAQ chairman. This guy is Bernie Madoff. He has friends all over America. How could this high-profile guy be committing fraud? That's exactly what we see here. That when you put the names out there, he's US quoted, he's audited, he has a good board of directors, he's $1 billion listed company as quoted by Bloomberg. Then the doubt seems to be on you asking the simple question like you're asking. You haven't hit it in Nigeria. If you have $1 billion valuation, why haven't I seen one single phone in Nigeria? So you start to look like the foolish one. And that's actually how the fraud gets perpetrated. It's so apparent it's a fraud that you think by asking basic questions, you are the one getting it wrong. And that's why maybe the local guys must have missed it.
No, my worry is, I'm just worried. Imagine how much some of these investors have lost. And
Yeah.
I'm just worried for other Nigerian. I understand. I mean, you just
let me
said
help
this
you a
is
bit,
a
right? Let
company
me help you a bit.
registered in the. But
This
the
fraud
truth is that
happened.
I'm just worried for other Nigerian companies now that will be coming up to, just as I said, to the market there to list. How are they
Yeah.
going to get the trust of investors? I mean, with this development.
Let me help you a bit. This happened because the transactions did not involve cash. It was a very elaborate fraud. What he did was that he sold Tingo to another company in all share transactions. So he simply says, I'm going to sell from my left pocket to my right pocket for $1 billion, just example. And suddenly his left pocket had $1 billion. Then he sold those $1 billion shares on the stock exchange, giving it legitimacy. There was no actual cash transaction. That was the red flag. That a guy that owns a company, owns two companies, is selling shares from one company to the other companies in billions, no cash transaction. That should have flashed a red flag all over the place. It wasn't picked up. Then he, of course, he repeated that same trick again. He sold the telecom guys to the food processing guys and just inflated the figures. So when we say cash is king, this is what we mean. You can post profits, you can post revenues, you can post whatever you want to post, but the cash part of the transaction, if you don't see it, it's really a red flag. You've got to ask, where is the cash? So if you go forward now, I'm sure they're going to put a lot of focus now on what is the cash being generated. Also, what is fintech guy to tell you, our profits are on eyeballs, on traction, on market spread. All that has to go away now. We have to ask the basic questions. How much cash are you generating from operations? Where is the cash docked? And we have to go verify that. I think once we get back to basic everyday accounting, things like this won't happen anymore. This was more or less high-flying finance rules that, got into the place of normal, everyday, common sense accounting. And this is what we get out of it.
How do you think the investors are going to be compensated for this fraud?
Well, the way it happens in America is they go after anyone that could have enabled this fraud. If the auditors or the board of directors enabled this fraud to have been perpetuated, they go after a disgorgement principle on them. So you give back what you earn. Of course, the CEO that's on indictment now will now be forced to give back seller assets to give back to the investors. But they really go after everyone. They try to rope in everyone in. If you analyze this stock and you say this stock was a good stock, they rope you in. You have to give back the funds. But remember, it's a stock market. It's profit and loss. You invest, you lose. That's why you really have got to get advice before you go into these things. I think the main focus is going to be how the auditors gave this account a clean bill of health. And also, if you read the SEC guideline, the SEC report on this company, the board of directors or the chairman actually was pressing the CEO. I want to talk to your staff. I want to talk to the bankers. And he never got through. So you want to ask yourself as a board chairman, are you a chairman of a company where you haven't spoken to the staff or to the internal audit department of that company? You could also be in trouble going forward. If you simply say I'm a chairman and you take the traps of the office and you don't do the job required, the audit department, the audit committee, you don't do your job, you are also going to be roped into an issue like this. If they don't get enough money, I'm sorry, you lose. But if they're able to get back funds, then you get back your funds. This is going to be a big haircut for investors.
And to think that this individual was going to buy Sheffield United Football Club.
And that's the thing. It reminds me of Bernard Tapie. The way fraudsters operate is to do bigger things. So to make the smaller things look insignificant. Because if he's going to buy Sheffield, he obviously has got the money. So why would he be worried about the mere 100 million in Tingo Foods? If he had bought Sheffield Wednesday, I can bet you he would have bought it with stock of Tingo. So he would have given the Sheffield Wednesday stock of Tingo. Sheffield Wednesday owners would own stock of Tingo, a fast-growing fintech company in Nigeria. That would have been the narrative. He would simply take Sheffield Wednesday, and of course, it has more assets, but less cash. And if he can engineer his way through and make money from Sheffield Wednesday, he might have cleaned out his losses. Maybe that's what he was thinking about. But in the end, cash is king. With Bernie Madoff, with Bernard Tapie, it always comes down to where is the cash? When you don't see the cash, then of course you then see the results like this. Sad one. It's sad that a young guy in a growing sector, this is fintech is where in Nigeria we are hoping to replace crude oil. Now, I would personally, before I invest in any fintech, I want to see your bank statement. I don't want to see the profit. I want to see the bank statement, and I want to do a securitization to the bank to confirm this cash exists. If you have no cash, sorry.
So that's exactly what you will be telling investors, potential investors.
The accounts that you publish already have a cash flow statement. You want to look at that cash flow statement doubly. That's the point. It has a profit and loss, a balance sheet, and a cash flow. You can legally fine-tune profit and loss and balance sheet to show what you want to show. You can't change the cash flow. Cash is cash. If you focus on the cash, you've sold 1 million phones. Where is the cash? It has to sit somewhere. You can make revenue and put it as sales or whatever, but the cash that hasn't come through gives us an indication that there should be a flag we should go down that rabbit hole with. So that's what I'll say for investors out there. Look at the cash flows. And if you can't read it, go and learn how to read a cash flow statement. Then ask questions. If he says it has a lot of cash, why is he borrowing? If he has a lot of cash, why is he paying only stock to buy companies? Look at how Warren Buffett buys companies. He pays cash, right? So he has a lot of cash, he pays cash. He can't have 150 billion in cash and he's giving you stock of Berkshire Hathaway. Something doesn't really make sense there, right? So these are the things, the common sense things. That's one thing, the common sense accounting rules that regulators should focus on. You know, if he wants to buy a company, why is he doing share and he owns both companies? We should put more scrutiny on this transaction because it doesn't involve cash and he owns both companies. It makes sense. Don't think about it. I own 2 companies. I exchange shares and I suddenly get $1 billion out of it. Why didn't anyone ask questions?
Skalaja, thank you very much for coming on the program and thanks for your time.
You're welcome, sir. Thank you.
All right, that's how much we can take on the program this week. Thank you very much for watching and Merry Christmas. Bye-bye.